I think that the arguments and elements for a rally to continue are in place, because even today, with the hot PPI print, the stock market is basically flat. So we had a down open. I think investors bought that dip. Part of it is I don't think that the PPI is sending a message that inflation's soaring. There are some things to sort of cut out of that number.
If Tom Lee is correct, is Palantir among the stocks as it continues to dominate headlines? But beneath the noise lies the real question for investors. Are we looking at a generational defense AI winner or a stock priced for perfection? Still a buy now opportunity or wait for a dip? Let's analyze what's happening and why investors are paying close attention. But before we dive in, this video highlights 3 other AI stocks with BMNR already labeled as the next Palantir. To celebrate reaching 1,000 subscribers, I've created a free guide on spotting breakout stocks. You can grab your copy from the description below. If you enjoy this kind of content, don't forget to like, share, and subscribe. It helps us reach more investors like you. Quick reminder, this video is not financial advice. Investing in stocks is risky. Always do your research before making any decision. All right, with that said, let's get started. When it comes to artificial intelligence, few names evoke as much imagination as Palantir Technologies, ticker PLTR. The Denver-based company describes itself as the operating system for AI, powering everything from Pentagon missions to Fortune 500 supply chains. In simple terms, Palantir helps governments and businesses make sense of chaos by combining large amounts of data into a single, clear dashboard. Its artificial intelligence platform, AIP, doesn't just analyze data, it transforms it into actionable insights that save time, money, and sometimes lives. That vision has fueled staggering growth. Revenue just crossed $1 billion in a single quarter for the first time, while CEO Alex Karp is promising a crazy efficient revolution, growing revenue tenfold while cutting headcount. Wall Street has taken notice. Palantir stock has nearly doubled in 2025, drawing comparisons to Nvidia's role in GPUs. For forward-looking investors, the hope is clear. Financially, Palantir looks impressive. Management raised guidance to $4.14, $4.15 billion in annual revenue, implying 44% growth. Its Rule of 40 score, a measure of growth plus profitability, soared to 94%, more than doubling what investors typically consider excellent. But here's where the hype meets risk. Palantir trades at sky-high valuations, nearly 300x earnings and 8,100x sales. Short sellers like Andrew Left have called it absurd, pointing to parallels with past bubbles where investors ignored the math. Then there's concentration risk. A significant portion of revenue still depends on the U.S. government. Political shifts, budget cuts, or contract delays could quickly disrupt growth. Add in higher interest rates and a market already nervous about inflated AI valuations, and the setup appears fragile for short-term traders. Technically, the stock is in full momentum mode. Palantir broke through a rising wedge pattern, a typically bearish setup confirming bullish strength and pushing shares toward new highs. Analysts now target around $201.30, while short-term resistance stands near $188. Momentum indicators, however, are flashing red. The RSI is overbought, signaling potential profit-taking ahead. On the downside, $173 to $175 is strong support, while a clean breakout above $188 could unlock another rally toward $200 plus. In simple terms, the long-term outlook is strong, but in the near term, the stock may need to cool down before rising again. For long-term investors, Palantir offers one of the most compelling AI stories of the decade. If it hits its 10x revenue target, today's premium could seem cheap in hindsight. However, for short-term traders, this is a high-risk, high-reward opportunity with plenty of volatility. A cautious approach, such as scaling in, dollar-cost averaging, or waiting for a pullback, might be wiser than going all in. Before moving on to the following stock, consider, do you think Palantir still has room to grow, or is it already priced for perfection? Would you treat it as a short-term trade, or hold it for the long haul? Moving to the following AI stock, Lumen Technologies, ticker symbol LMN, the company is no longer a sleepy telecom. It's working to become the connective tissue of the AI era. The pitch to investors is simple. If AI is the future and data is its fuel, then Lumen controls part of the pipeline. When most people think of artificial intelligence, they picture the flashy headlines, Nvidia's chips, Palantir's dashboards, or OpenAI's futuristic models. But here's the truth that Wall Street often misses. It isn't effective without proper infrastructure. Data needs to move, and it has to do so quickly. That's where Lumen Technologies comes in. Once dismissed as just another struggling telecom, Lumen has quietly shifted into a provider of digital infrastructure for the AI economy. Its fiber optic network, spanning thousands of miles, is becoming the main route for AI workloads. Here are the reasons why you should be paying attention to this growth stock. In 2025, Lumen signed over $8.5 billion in AI connectivity contracts. That's not just theory, it's real demand. A cleaner balance sheet. Selling consumer fiber assets to ATANT freed $5.75 billion, helping Lumen lower debt and improve credibility. Rising free cash flow and cost discipline. Management increased free cash flow guidance to $1.20, $1.4 billion while tightening cost targets. Analysts are finally siding with the upgrade. Citi recently upgraded Lumen to buy, citing its AI infrastructure role as a long-term catalyst. The risks investors can't ignore revenue continues to decline. Legacy contracts are disappearing faster than new AI deals can grow. Valuation looks modest for a reason. Price targets hover around $4-5, signaling tempered optimism. Execution is everything. AI contracts are impressive, but execution will determine the success or failure of this turnaround. Technical perspective. From penny stock to quiet recovery. Lumen used to be a penny stock, trading below $1. A year later has gained over 300%, now close to $4.43. Support zone. $4 to $4.30. Repeatedly tested, offering a solid cushion. $5.50 is a key resistance zone, so breaking the ceiling could unlock momentum. Indicators are bullish, but not euphoric, signaling cautious optimism. So here's the question. Do you see Lumen as a forgotten telecom reinventing itself, or is this just another temporary bounce? Would you rather invest in the digital infrastructure behind AI, or stick with flashier names like Nvidia and Palantir? And speaking of AI's hidden infrastructure, there's another company transforming the backbone of generative AI. But instead of fiber optics, it's GPUs on demand. Let's turn to CoreWeave, a name quickly making waves in the AI race. Ticker symbol CRWV has been one of Wall Street's most discussed AI infrastructure plays. On the surface, the story sounds almost irresistible. This company isn't creating apps or consumer gadgets, it's providing the picks and shovels of the AI gold rush. In simple terms, CoreWeave operates a specialized cloud platform powered by large fleets of GPUs. Think of it as a high-performance AWS tailored for AI. It helps companies train large AI models, speed up generative AI workloads, and even handle Hollywood-quality VFX rendering. Companies across various sectors, from finance to life sciences, are also turning to CoreWeave's GPU cloud for critical tasks. In simple terms, if AI is the future, CoreWeave is trying to provide the engine room of that future. But this is where the story becomes complicated and risky. First, insider selling drew concern. After its IPO, a significant 83% of shares were unlocked. Insiders quickly sold more than $1 billion worth of stock. The result? Shares dropped nearly 35% in just 2 days. This kind of volatility isn't unusual in high-growth tech, but it shows how fragile investor confidence can be. Second, the company is overwhelmed by debt. With as much as $8 to $11 billion on its books and rising operating costs, CoreWeave is walking a fine line between rapid growth and financial trouble. Yes, they're reinvesting aggressively to expand, but that leaves little room for error if demand declines. Third, customer concentration is a warning sign. When more than half of your revenue relies on one partner, in this case Microsoft, you are vulnerable. If that partner decides to scale back, develop its system, or push for tougher terms, CoreWeave's growth could suddenly come to a halt. And finally, valuation. Even after the sell-off, CoreWeave trades at extremely high multiples, 26 times sales by some estimates. That means the stock is valued for near-perfect execution. Any earnings miss, slowdown in AI hype, or correction could be harsh. So, is CoreWeave a future giant, or just another overheated AI gamble? CoreWeave is at the heart of AI adoption, with genuine revenue growth and strong partnerships. However, the bear case is just as compelling. High debt, dependence on a few customers, and inflated valuation make this one of the most risky investments today. Moving to the next, a few investors have dubbed it the next Palantir, likely because of those involved. BitMine Immersion Technologies, ticker BMNR, a high-stakes bet on Ethereum's future. At first glance, it appears to be just another Bitcoin miner with flashy cooling technology. But look closer, and you'll understand why some investors are whispering its name alongside MicroStrategy. It's sitting on a massive Ethereum war chest, now exceeding 1.15 million ETH, worth nearly $5 billion. That makes it the largest corporate holder of Ethereum in the world. For comparison, MicroStrategy did something similar with Bitcoin, and its stock surged more than 10,000% from bottom to top. Backers aren't minor players either. Peter Thiel owns nearly 10%, and ARK Invest has invested over $180 million in the stock. That kind of backing adds a halo of credibility to BitMine, at least for now. The shares have surged from $30 to over $60 in weeks. Volumes are heavy, the stock is liquid, and traders are treating it as the new high-beta crypto trade. Looking at the hard truths and risks, you can't ignore beneath the hype, the fundamentals are far less flattering. Small revenue base. Only around $5 million in recent sales, with net losses exceeding $6 million. The business itself doesn't support a multi-billion-dollar valuation. Valuation on another planet. At nearly 1.0x sales, BMNR makes even frothy tech multiples look conservative. ETH dependency. The stock is closely tied to Ethereum's price fluctuations. If ETH runs to $5,000, BMNR could double again. But if ETH slides under $3,000, this stock could halve overnight. Dilution risk. As it pursues growth and raises capital, shareholders might see their ownership interest diminish over time. Volatility. Like few others, daily swings of 20% aren't anomalies. They're routine. This isn't a stock for the faint of heart. BitMine isn't a telecom pivot like Lumen or a data empire like Palantir. It's a purely speculative crypto treasury play wrapped in an equity ticker. For believers in Ethereum's long-term growth, BMNR offers asymmetric upside, potentially life-changing gains if ETH soars. For skeptics, it's a bubble in the making with no floor once sentiment shifts. In short, this isn't an investment in the traditional sense. It's a leveraged bet on Ethereum's future, boosted by Wall Street hype. Which of these three AI stocks are you watching closely, or is the third stock the next Palantir? Let me know in the comments below. Remember this for information and educational purposes only. Investing involves risk. See you in the following video.